I'm a whale watcher. I'm a whale watcher. I'm a whale watcher. Are you? Does this market have you down? Well, then let's do a little Wall Street whale watching. Hello, I'm Brian McKeon, treasurer at the McKeon Trust, and today we'll be looking at number 36 on my list of the 100 top traders. Now today we'll be looking at TrackEdwardOwens. And what we do here is merely look at the holdings of some of the most successful investors out there, and we find their information on the Motley Fool caps. Then we get an average analyst ranking using these free websites. So looking at the holdings of TrackEdwardOwens as found on the Motley Fool caps, you can see that Johnson & Johnson, MDT, and Gilead all make it into the buy camp. And you can see the holdings that make it into the hold and sell camps as well. Now here, looking at the stock Johnson & Johnson, you can see that it's currently trading in a sideways range, more or less above most of its moving averages. So stochastics is in the mid of the range with a slight upward bias. So I'd look for this one to go sideways to higher for now. Also, this one has a 2.54% dividend. So that would probably be a good reason to also look at investing in Johnson & Johnson. Next, MDT is currently had a sell-off and is currently down below most of its moving averages and is currently sitting on the 200-day moving averages. Stochastics are in the embedded and oversold level. So typically you would get a bounce on the 200-day moving average, so we would look for this one to bounce for a while. But since stochastics is in a strong embedded downward bias, we'd probably look for this one to bounce for a little while for a short-term trade and then likely head lower. So I would probably call for this one to head, get a short-term bounce and then go sideways to lower. And this one has a 2.21% dividend, which could be somewhat of a reason to look at it, but due to its overall negative bias, I'd probably say stay away from this one. Now looking at Gilead, you can see that this one's had a recent run-up above its moving averages. The 20-day and 18-day have both come up across the 200 days, which is a classic buy signal. It was right in its upper Bollinger Band while it was doing so, and it had a recent sell-off lately. So in the short term, I'd probably say this could fall down to its 18 and 20-day moving averages, and maybe even some of these other averages as everything's crossing. But in the long term, this would probably look good for a long-term buy based on the moving averages indicators. Stochastics is in the embedded to the upward bias, but it is in the crossing pattern. So this one could be looking to go down to maybe the 200-day, but I would still say that the momentum is to the upside. So I'd look for this one to go sideways to higher for now. And also remember that this one has a 2.74% dividend, and it's a good, strong biotech stock. So this one would probably be something to look at for its dividend as well. So in review, you can see the stocks that we looked at today were Johnson & Johnson, MDT, and Gilead are all stocks that made it into the buy camp TrackEdwardOwens portfolio. And again, I'd like to remind you that all analyst recommendations are as of August 3rd, 2017. And if you'd like a more up-to-date view of TrackEdwardOwens, you can find that on the Motley Fool caps. Then go over to these free websites to get an average analyst ranking. So, disclaimer. I am not a licensed investment advisor, and the investments I am showing you today are what I'm doing for my friends and family's accounts. And I am not affiliated with any of the websites used to determine these rankings. And I currently own none of the stocks discussed today. So again, I'd like to remind you to subscribe to see more content like this. And I'd like you to find a cause that you care about and give something back.